Okay, so you know how we were all freaking out about interest rates a couple months ago? Like, if you even thought about buying a house or a car, you'd immediately break out in a cold sweat.
Yeah, those rates were not for the faint of heart.
No, they were not. But then, plot twist, the Fed comes in with their big interest rate bazooka and suddenly everyone's talking about cuts. But like, what does that even mean for regular people?
That's the million-dollar question, right? And luckily you, our amazing listeners, sent us a mountain of articles and data dumps and even some of those wild Polymarket predictions to help us unpack it all.
Seriously, Polymarket, by the way, fascinating stuff. They're saying there's a chance, and I'm not making this up, that mortgage rates could go below 6% this year. I mean, 6 months ago, we were all bracing for like 8%, maybe higher.
It's definitely a head spinner, that's for sure. Polymarket's whole thing is about tapping into this wisdom of the crowds idea, basically using prediction markets to see where the sentiment lies. And right now, yeah, there's a definite buzz about lower rates.
But is that buzz justified? Are people getting ahead of themselves, or is there actually something to it?
Well, it's not like it's coming from nowhere. I mean, the Fed just did a 50 basis point cut. That's huge. Largest since what, 2008? They're clearly serious about switching gears here.
2008. Okay, see, now that's a historical reference point that makes my ears perk up. But weren't things a little different back then? What's with the sudden urgency to cut rates now?
Right. It's a good comparison, but important to remember the context. Back then, it was crisis control, full stop. This time, it's more like, imagine a tightrope walk. The Fed is trying to rein in inflation, which has been public enemy number one, but they also don't want to slam the brakes on the economy completely.
Right, because too much inflation is bad, we get it.
Yeah.
But a stalled-out economy isn't exactly a picnic either. Speaking of inflation, our Polymarket research also mentioned the Consumer Price Index, CPI. It's dropped to 3.1% from a whopping 9.1% last June. I mean, come on, that's going to be good news, right?
Oh, it's a serious drop, no doubt about it. But, and this is where the whole wisdom of the crowds thing can get a little, shall we say, optimistic. The Fed's target inflation rate is closer to 2%. Getting from 3.1 to 2, that's the tricky part. Like those last couple miles of a marathon, every bit of progress is going to take way more effort.
So we've got the Fed making moves, big ones, but cautiously. Inflation is better, not gone. And Polymarket has some folks betting on even bigger rate cuts, like exceeding 150 basis points by the end of the year. This is a lot, so what I'm hearing is, don't go on mortgage broker just yet.
Exactly, but don't abandon those home buying dreams completely either. See, the thing is, the U.S. economy, it's not exactly operating in a vacuum here. What happens elsewhere, even across the pond, can have a ripple effect. Like, did you know that even decisions made by the European Central Bank can impact what happens to our financial system?
You're right. The global economy is like a complex web. What happens in one part can definitely tug on other parts, sometimes in unexpected ways.
You've got it. The global economy is a complex web, and what happens in one part can definitely tug on other parts, sometimes in unexpected ways.
Okay, so break it down for me. The European Central Bank, or ECB, they're kind of like the European Union's version of the Fed, right? What are they doing with interest rates these days?
You've got it. They're the big players in the Eurozone. And your research actually included some ECB predictions from, you guessed it, Polymarket. Seems those crowdsourced forecasts are popular on both sides of the Atlantic.
Oh, well, spill the tea. Are they slashing rates with the same gusto as the Fed? Should I be brushing up on my euros just in case those European real estate markets suddenly become the hot ticket?
Hold your horses. While the ECB is leaning towards rate cuts too, they're taking a more cautious approach. Polymarket suggests a cut might happen in October, but nothing like the Fed's recent power move.
So a little less rip off the Band-Aid and a little more, let's see how this ointment works first.
Exactly. And looking even further out, Polymarket predicts that by June 2025, the ECB's main interest rate will likely land somewhere between 3% and 3.75%.
Okay, so not drastically different from where the U.S. seems to be headed, but maybe a slightly less bumpy ride.
Precisely. Both central banks are trying to find that sweet spot, keeping inflation in check without sending their economies into a tailspin.
It's fascinating, though, isn't it, how these decisions about numbers on a spreadsheet can have such a real-world impact on people's lives. I mean, if those Polymarket predictions pan out and rates really do drop, that could be life-changing for someone who's been priced out of the housing market or struggling with loan repayments.
Absolutely. And it's not just individual borrowers who feel the effects. These interest rate shifts can influence everything from stock market investments to global currency exchange rates.
It's like this giant economic engine, and even small adjustments can make the whole thing hum a little differently.
A very astute observation. Which brings us to the crux of the matter. With all these moving pieces, the Fed, the ECB, those intriguing polymarket predictions, what does this all mean for you, our listener?
Right, because let's be honest, that's why we're all really here, isn't it? We want to know how to make smart decisions with our money, especially with all this economic uncertainty swirling around us.
Exactly. So let's cut through the noise and get down to the practical advice. Let's say you're considering a major purchase like a home or a car, and you've been holding back because of those sky-high interest rates we saw just a few months ago. Should you jump back into the market now that rates seem to be heading down?
Or maybe you're thinking about refinancing your mortgage to lock in a lower rate. What factors should you be considering before you make a move?
These are crucial questions, and it's important to approach them with both cautious optimism and a healthy dose of reality.
So no rushing out to buy that sports car just yet.
Probably not. While those lower interest rates might be tempting, it's crucial to remember that economic conditions are constantly in flux.
So no rushing out to buy that sports car just yet. What I'm hearing is, don't let those headlines about rate cuts make you throw caution to the wind.
Exactly. We can't predict the future, no matter how much we analyze those polymarket predictions. Instead of trying to time the market perfectly, focus on what you can control your own financial preparedness.
Okay, so what does that actually look like? Give us the actionable advice. What should our listeners be doing right now with this new information in mind?
First and foremost, don't make any rash decisions based solely on short-term trends. So, like, if you're considering a major purchase, make sure you've got a solid financial cushion and factor in the very real possibility that interest rates, they could fluctuate.
Because even if they dip below 6%, there's no guarantee they'll stay there forever, right?
Precisely. It's a fluid situation. Keep a close eye on those inflation reports. And economic forecasts, too. Those will give you valuable clues about the direction interest rates might be heading in.
And hey, don't be afraid to phone a friend.
Yeah.
Or rather, a financial advisor.
Absolutely. Talking to an expert who can really look at your specific situation, that can make a world of difference in navigating these, let's be honest, kind of complex waters.
Because here's the thing about economics, right? It's not just numbers on a spreadsheet. At the end of the day, it's about people. It's about choices and how those choices are being influenced by this whole web of interconnected factors.
Couldn't have said it better myself.
It's like you said earlier, even something happening across the Atlantic, like those ECB interest rate decisions can have ripple effects over here.
Exactly. And those ripple effects, they can impact everything. We're talking housing market, investment strategies, you name it. It's all connected.
Which I think brings us to a final thought-provoking question for our listeners to ponder. We've talked a lot about how these interest rate shifts might affect your mortgage, your investments. But what about the bigger picture? Could these economic changes have any influence on, say, the stock market as a whole? Something to think about.
It certainly is. And on that note, I think we've given our listeners plenty to chew on today.
We have. So to our listeners, we hope you've enjoyed this deep dive into the world of interest rates. Remember, knowledge is power, especially when it comes to navigating these complex financial waters.
Stay informed, think critically, and make those financial decisions with confidence.
And as always, happy diving.